What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol S for SentinelOne. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, I need to let you know they gave us an earnings announcement after the bell today, so let's flip on the extended hour session and see what's going on with that number. Zooming in here, you can see quite a bit of volatility, to be quite honest with you. If you look at this upper wick as well as the lower wick of the same 30-minute bar there, kind of all over the place. At first, it was a gap up, now it's a gap down. It's not abundantly clear to me whether or not we'll open inside of range. Look at how close we are as of right now, just a couple pennies off from being back inside of range. So what we're going to do is discuss the difficulties of, these types of instances, to be quite honest with you. So we want to know where the overnight high is. We want to know where the overnight low is. And let's just say that the forecasted opening print will be here at and around, let's just bump it up and call it 47 even, okay? So with that kind of out of the way, let's turn this back off, eliminate some distractions, and focus over on the daily time frame chart to talk in terms of scenarios. So usually whenever we're dealing with gap downs or gap up, scenario number one is the gap and trap, right? So what that would mean on a gap down is opening here, failing to attract new sellers under the overnight low. You would trade back long through the open to fill the gap. Now, I mean, look at the gap, right? Are you actually going to trade for this range with a risk of something like this? Absolutely not, right? It doesn't make sense. Now, the same thing is true but opposite for your sort of, upside trade. Let's say we actually open inside of range. We do something like this, move towards that overnight high, fail to find new buyers here. You're not going to short under the open to target the low of day, right? In that instance, your risk is a little bit better in terms of ratio to the reward, but it still doesn't make sense. It's less than a 1-to-1. So that, again, it just goes to show the difficulties of how this trade could potentially unfold. Now, here's an instance where maybe the trade is something worth paying attention to, right? If we're technically slated to open just below the low of the today's session, then if we do something like this and immediately turn back around, what does that tell you about all of these people who got involved on today's session, right? All of those people are essentially wrong if we resist at the low of day. So in this instance, it does set up a short trade to potentially break back down either underneath the open, or if there's some sort of 30-minute bull or bear flag, off of the open here, something that would lead to lower, then in that instance, the overnight low is actually the target, right? So that's how you want to start thinking about these setups where it's a little bit more difficult to do the traditional scenario number one, gap and trap, or scenario number two, gap and go, right? So again, think about this logically. Think about who got involved on today's session. Are they right or wrong? Are they feeling pain, or are they happy with their positions? If we resist at that low, do something like this, I would imagine that we might go back down to the overnight low closer to about 42. So that's one potential setup here inside of Sentinel. If it does happen to move higher and firmly into the prior day's range, that's where I would probably just stay away, noting that there would need to be some more structure here for me to really want to get involved to the upside, right? And before I go, let me also check in here. So the stock is hard to borrow, so you're not actually going to short the shares, and the volume here on the options contract actually isn't terrible. The spread is a little bit wide on the $50 strike here, but maybe, just maybe, I can't guarantee this, it will tighten up on tomorrow's session when there should be some more volume based on the earnings announcement. Again, 4,000 contracts isn't the worst, but a little bit spready here, 570 by 640, just a little bit too much of a haircut to market in and out of some contracts there. So please, evaluate that, adjust accordingly, see if the spread has tightened up, and maybe it's a trade for you. If not, feel free to pass on it and go on to the next opportunity here. But that's what I'm seeing inside of Sentinel. If you enjoyed the video today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.